So if you have large capital gains that are unusual, so we've got a lot of clients who are retired and they're in these mutual funds and there's capital gains every year because inside the mutual funds they're selling their holdings from time to time. And so there's always going to be a pass through capital gain event. But it's usually fairly consistent within a few $1,000s. But if there's something that's outsized, then you have to factor the fact that, yeah, there's taxes with capital gains. Now, I will tell you, long-term capital gains rates are the biggest scam going in the tax world, and I'll explain why. Long-term capital gains rates are for things that you have owned for at least 1 year, and for that, you basically get half off on your taxes. So if you buy something for $50,000, hold it for over a year, sell it for $100,000, now I have got a $50,000 gain. So my long-term capital gains rate is going to depend on my total income for the year. It's either going to be 0%, and this is federal, 0%, 15%, or 20%. And if your overall income is high enough, you're also going to be hit with an Obamacare tax, the net investment income tax of 3.8%. So realistically, it's going to be 0, 15, 20, or 24% federally. And then each state handles capital gains in different ways. Sometimes it's just the regular rate. Sometimes there's a preferential rate, like Massachusetts has a preferential rate. But most of the time, it's just going to be whatever your state tax rate is going to be on that as well. So figure 5%. Okay. So just know that there are capital gains taxes. So that's number one. Just know that they exist. And planning for it, really, it comes down to what else is going on, what else can we do, and then just being proactive about it. So the thing with capital gains is that they're not surprises, typically. You got a big chunk of money somewhere. So recognize that, plan for it, know that there's going to be taxes associated with it.
Right.
Yeah, and if the number's really big, then there are exotic strategies. And I talked about the exotics before, but there are exotic strategies for dealing with that. But those need to be like well over six figures, usually like 500,000 and up, that kind of thing. If you're in that camp, give us a call and we can talk about some of those options. But by and large, just know that taxes exist, set aside money, or make an estimated payment for that potential liability. Now, the reason capital gains rates are the biggest scam going is because they are not inflation adjusted. So if you held a stock, like I've got a lot of people who have held stock for 30 years, and yeah, the cost basis is almost nothing compared to the price today. And so the entire thing gets taxed. Now, yes, it's a discounted tax rate, but it's still taxed. But when you inflation adjust that purchase up to over the 30 years, the capital gain might actually be nothing. And it's just that your money has been eroded due to inflation. By and large, the longer the term of the capital gain, the worse the real tax rate is. And when I say real, I mean adjusted for inflation. And you can go to the Bureau of Labor Statistics, so BLS.gov. They have an inflation calculator according to official government statistics, which may or may not be conservative or not. And you can say, okay, if this thing cost me $30,000 in 1990, what's $30,000 worth today? In fact, we can do this. Wasn't planning on doing this, but let's give it a shot. Let's see, BLS inflation calculator. What's that website? Okay, bls.gov/data/inflation calculator. All right, so let's share this screen. I'll go to here. Okay, so let's say S&P 500 chart. Sure, let's go to Yahoo Finance. And let's go to, I don't know, how about 1995, way back here. So back in 1995, the S&P 500 was $453. Okay, so let's say 453 January 95, and he sold it today, right? And today it's 5,600. So basically a 10x. But inflation adjusted, it's 961. So, it's really a 5x in real terms, according to government statistics. So you're paying tax on that doubling that you never got in real terms. And so if I'm getting taxed at half rate, but I am missing out on a 2x rate of return due to inflation, then those cancel out. And effectively, I'm paying regular tax rates in real terms on the money that I made. So that is, in my opinion, that's the biggest scam in tax right now. Now, during Trump 1.0, there was a proposal to inflation adjust cost basis in capital gains, but that was never passed, unfortunately. But maybe, I doubt it, but maybe that will get done this time around.
Alrighty.